Okay, welcome traders to the Q&A on all things trading. It's the Wednesday, the 19th of March. All right. Now let's just get cracking on this. So, as I was just saying, just type in your questions there to the Q&A on all things trading. I'll get to your questions as I can. And then as I said, I was just focusing on, well, I can focus and start the Q&A session on things that I get common questions about. And one would be that I'm looking at a fair bit is when I'm sort of doing the prime time analysis. Okay, now I tell you what, we've had a crew working on this for like 3 weeks, as in just automating this. They are taking their time. So in the meantime, I actually update this manually myself. Now, this is a very simple process. If you set up your trading platform the right way, okay, now let me just explain to you and show you exactly what I'm doing to get these, to get the direction here, where momentum is. I mean, the idea of having this updated and live is you can come back and check this at any time. Otherwise, it's static. And to me, static data is not that good because it's, we're dealing with a very dynamic market. But let me just show you how simple you can get with your process of identifying short-term and long-term trend and the same for momentum. Now, just using Metastock, I mean, I've been using this for 17, 18 years. It was the same service we used in the banks. Of course, they've taken out a few bits and pieces, but generally the framework is the same. Now, I have a couple of like a whole bunch of templates, but I only really need two or three to get started. Now, if I'm looking at the charts, FX hourly charts, and then I'll look at the daily charts, just to get a good cross section of what's happening across the various pairs. Like looking at the price action here, right around, as we come into the Fed projections and everything else, you start to see how the market is set, right? And this is not really what I'm talking about, but I can just sort of talk about it because I'm seeing it. See how this market's the euro's falling back. You've got sterling falling there as well. Dollar Swiss isn't doing too much, but Aussie rolling over. The dollar's sort of just coming back a bit. It looks like the market has got themselves very long euro, long sterling, and probably short dollars, right? Obviously, to be long euro, you've got to be short dollars. So we are seeing a little bit of a flush out of those positions as we get closer towards that Fed meeting. Now, there's no chance of a change of rates. It's 99% factored in. There'll be no rate change. But everyone's talking about these projections, for inflation, growth. What does the central bank think about Trump's tariffs is where we're getting to. Now, that's by the by. And what I want to show you is how I get my charts up. Now, what I've got here under my tech template, I've got the hourly and dailies, like a cross section of the market, right? If I just show you that, the pretty much the same as the other page. I just like saves me changing pages again. Then I've got all the major instruments at the top, plus some of the commodities, metals, and the indices, and even Bitcoin for that matter. So what I am usually doing, right, the very simple process, okay, I'm looking for short-term and long-term trend, right? Then I can work out where the direction is. Now, to do that, instead of having four different time frames here, I've just cut it down to two. So all I've got here is, as an example, the hourly chart and the daily chart for euro, right? So if I'm looking for direction, I'm just really looking in reference point to the bull bear pivot line, okay, on both. So in that regard, now it's broken down, I would say down and up, right? So if I was, and I will be updating this after this, I would just simply change the arrow here to down and up, right? Simple. By having the two major time frames next to each other, I can quickly go, okay, this one's down and momentum, you know what? That's still down. Okay. And it's above the bull bear pivot line here. So still the long-term trend for euro is up. And at the moment, if I just get onto this, it's not quite down yet, right? This, even though it's overbought, you either want the red line, the main line, to break down below the blue line or break down below the 80, right? So that in that regard, I would quite simply this is where you get the mixed result. Now we've got down, up, and still down, and maybe sideways, right? By that way. So the easiest thing to do is what I'm trying to explain is just looking at stay sterling. Okay, this is where you get a bit of extra kick in there. If you've got this support line is, I mean, it's only got a few touches and it's very steep, but you can see it's broken through that, but still it's right at the bull bear pivot line, right? So, right, if you had to ask me right now, I would say it's neutral. It's sort of dead on it, sideways, uncertain whether it goes up or down. And then long term, it's going up, and the same sort of profile here. Like I'll tell you what, leading into this event, the markets are a little bit fluxed, right? Short-term momentum massively oversold, long-term momentum massively overbought, and we've got this is what the Trumpisms are doing for us just at the moment. So, yesterday taking a little bit of cash out of the market with those stocking fillers. You got to take those when you can, because I was looking at this. I've had a pending order on dollar Swiss all day, and I've cancelled it now, because it's like nothing's really happening until we get there. But anyway, so just having a look here, how to simply get a profile for yourselves, short-term and long-term trend, and the short-term momentum, long-term momentum. And the idea of having it this way really is so we can identify really clear conditions, right? Euro was going up short-term and long-term. If that's the case, direction is clear, it's bullish, and then we're just waiting for momentum to line up for us or an economic data release, right? So that's one simple way to really get your head around, drawing those trend lines. All right, now let's just get into one of the other major parts, which sort of hit a nice, well, I'd say a nice raw nerve with a lot of traders, and it's in reference to the basic expectations of your trades, right? And this is probably something that hasn't been drilled in enough. Let me just change the picture over there. Okay. So what we're looking for is, going back over time, what we've really focused on are the really good trading opportunities, right? That's the core basis of our training, is getting you to wait for these opportunities here. But in amongst these trades, okay, it's a little bit, you have to get a little bit, creative, but also the markets have got a lot more dynamic especially over the last 10 years. Since the global financial crisis, then, there's been a number of different issues, pandemic, amongst those. So, you know what? And then you've had big changes in governments, Trump being one of the sort of major components of that. His second term, hopefully it's a little bit better than the first one. So we're looking for these trades, and that's what ideally we still are waiting for these to line up. Okay. That's where the short-term trend, long-term trend line up. We've got central banks telling us this is what they're doing. It's going with the trend. We are just getting into the trend day in, day out. And you know what? You'll get lots of these great trading opportunities. Are they there that often? Not really, right? Over the 10 weeks for this 10-week challenge, I'm looking at potentially 4, maybe 5 of these trades over a 10-week period, right? That's how my expectations are managed around making those big winners. Outside of those, right, your bread and butter. Now, stocking fillers are your bread and butter. Okay, trades where you go in, really you are only looking for a couple of grand, but you need the setup. And this is what I want to explain to you, because I've had a few questions from a few traders talking about, okay, so I'm going in, I'm sort of risking like 3 or 4 grand, but I'm only going to take 2. Well, it's a little bit different to that. That's a little bit right, but it's a little bit wrong as well. Now, the stocking fillers, yeah, if we see a couple of grand in there, right, and everything's moving nicely, well, then we will give it a bit more time, and a lot of these will roll over into okay trades, right? That's sort of the fact of it is. But this is the thing. With the stocking fillers, even though we are looking just to tap in at a minimum, say a grand or two, and when I say a grand or two, it's sort of that covers most position sizes. If you're trading 20 lots or above, well, that's probably going to be up around 4 or 5 or 6K. But 10 lots or below, you're picking up 1 or 2K on those trading opportunities. The key to this is not losing track of actually what you're doing, right? And what I mean by that is you need to keep a very close eye on a couple of different things, right? Now, you do need to focus. You can't like just go into trades and go, well, I'm just going to place a 50-point stop loss in the market and, I'm just looking for 20 points. Well, you still need to focus on, okay, direction of the markets, right? If you can get, the treasury yields, right? They're sort of just off a touch. If that flows into a higher equity market and you got a risk on profile, the dollar going down, euro, sterling, Aussie, Kiwi going up, well, you got good market conditions, right? So what I'm trying to say is you still need the profile of the trade to put these on, right? So for instance, like dollar Swiss, okay, it's broken down. We've got a resistance line here at 87.80. The market is respecting that. So to me, yeah, if you want to go in with a stocking filler here on dollar Swiss, and this is why I was sort of looking at it, yeah, we've still got a level here. We've got resistance that we can work with. We've got a level above. So this level comes in just below 87.80. Even if you had a 30-point stop loss, right, or 35, yeah, you've got protection here from this resistance line. You get protection from this resistance line behind it. And you've also got the bull bear pivot line. You've got a lot of things working for you, right? That's a trade with structure, technical structure. The fundamental aspect is going to be a little bit more disjointed when that comes out. But overall, when you're looking at the market, even though you're looking at these stocking fillers, right, and we are looking to generally take a little bit less cash, but it's more consistent, and it's more consistent because we have the setup that matches the trade as well. The fact is, you know what, the markets may not be going that far, so we get in. It's got all the profile to protect you against a move to the top side, and you are looking to take the cash. So that's very important, right? Because I had some guys sort of just saying, "Oh, so we just get into a trade and look for 2 grand." Well, not exactly, right? You've got to look. You're still looking for good technical setups, like the training guides you into that, right? So doesn't matter what instrument you're looking at, you've got to have structure. And generally speaking, there's got to be, you're looking for, right? You want to make sure there's 20 points in it, okay, at least. Now, generally, when we're putting a trade on, like a sizable trade, you are looking for at least, potential for a move. So this dollar yen, right, comes back down to here. We've got, this is probably not a good example, actually, because if it breaks down through the bull bear pivot line, down through the cloud, it's going to be a lot of pressure on the downside. Would I be buying at this level? You know what? I wouldn't be, because I've got things, there's a lot of pressure heading south here. Now, you might be looking at it if it's oversold massively, but then you're looking across the market. Your trade has got to match up with good structure, even though we are potentially taking less profit out of the market. Now, one other question was around this is looking, well, wrong one, looking at the bull bear pivot line, the stocking fillers, and looking at the smaller thing, right? The aim is this, invariably, we should get this in like you take out the Fed here. If the Fed meeting wasn't today, we'd have a nicer, a cleaner move already. But it is there. It compounds the problem, slows the markets down, and momentum sort of the life of momentum gets sapped out of it. So we are still looking for trades here. If you're going in with a trade in the middle of the market with no technical setup or nothing to work with, then you are guessing, right? These stocking fillers are not guesses. They are opportunities where, you know what, it's like Monday or Tuesday. It's not a great week, not a great time, especially if you've got big data Wednesday, etc., to be looking for trading opportunities. Like, look at euro sort of nosediving here. I've got to sort of see if I can find out what's going on. Let me just update my news page there. That's sort of hardcore, right? Ah, okay. So there's some news out of Turkey Air. Turkish lira drops more than 2% to new low after Erdogan rival detained. that'll impact Europe. I expect that to be the major news there. You know, some crazy stuff in Turkey, man. Okay, so this is like so basically let's not lose sight of, there's opportunities. So what we're trying to identify, this is actually a pretty good example. Like we've got a situation here where there's a big move down in euro. It's dragging sterling down. Should push dollar Swiss up. Like we're looking for good trading conditions. This would be one where I go, are you looking for a stocking filler on the euro here? Absolutely not, right? There's an event happening here. You don't really know the repercussions. Yeah, sure, it's oversold, but it's broken down through the bull bear pivot line. It's broken down through support. It's just sort of sitting down here. There's nothing to suggest when it goes back up, or if it does. If it depends on how big the news is, how real it is. You're looking for confirmation. So this is a trade that doesn't have structure that we would use, right? You might sort of think, well, you know what? It's a little bit oversold here. I could get in here at 108.70. I could get back to 90. There's 20 points. There's a stocking filler. Yeah, that's right. But I tell you what, that stocking filler comes with a huge amount of risk and uncertainty. So the stocking fillers that we do, it's more around the trading conditions. If the markets are pretty quiet, but they are sort of slightly trending, that's when those trades are in play. Okay. And you've got a pocket of activity. If you've got some experience, you'll know that this trading outlook, besides what's happening in Turkey, may influence this price, but it's going to trade like this until the Fed, right? Just sideways. So am I looking to get in here at say 70 and try and get out at, well, not far below 60? No way, right? There's too much risk involved. Okay. Even though you've got resistance and resistance, like the downside here, is there 20 points in the downside? Probably not. Okay. So that's what you're just got to like get to understand, because the danger, and I mentioned this to most of you guys are in the 10-week challenge. Looking at these trades here, this is your bread and butter, but it can be your nemesis if you start to go into trades just looking for 1 or 2K without thinking about the trade setup and the market conditions, right? You need the market conditions. You may not be getting the range in the movement, and that's why we're taking the 1 or 2K. And that's where we are, right? Does that make sense? I just want to make that very clear, because some of the questions I was getting on the Discord were from traders who haven't been with us for that long, right? And they're sort of like, oh, right, so this is the deal. We just sort of have a big risk and small take profit. No, not exactly. Even the trade today, I had a 30-point stop on it, 90-point take profit, just as a plan, as a general plan. The idea, generally, as a starting point, check it out at 20 points. If it stalls, stops, well, then I'll just take the cash. If it just keeps rolling, we'll give it a little bit longer. But now that profile has changed, obviously, with the Fed coming up and everything else happening. So that's where we are, guys, with those two things, right? Making your trade analysis easier, right? So that's especially if you guys have got Metastock, right? It is easy to set up your tech profile. You can, by setting them up like this, I tell you what, it makes so I just sort of sit here. It literally takes me about 2 or 3 minutes to go through all the currencies. I'm down, up, up, or whatever it might be. I flick through each of the major currencies and I can quickly analyze them. And don't forget, I'm just trying to be objective. So I don't have to think at this point, right? I'm just trying to work out where the direction is. Okay. And then go through the majors. I can even start to include, some of the metals, depending on what's going through the market. Okay. So that's sort of the stuff you got to think about, right? It's very easy to get lazy and start, not doing your work, and not cross-checking the market, right? So, and along with that, as you guys get a bit more experience, right, start to use the things that you can see and set them up the way you like them, right? I've got the treasuries here, the Swiss bonds, yen bonds. The This is just an extra page that was left off the other page. Currencies, safe havens. Like, get creative, use what you can, identify direction is your key goal here. Yeah, and the reason why I say it's your key goal is because if you can identify direction, um, then you've got a great chance of, even if you get the timing wrong, you can still get out of the trade probably flat with a little bit of cash or with a small loss. I had someone ask me the other day and said, before I updated the 10-week challenge, I had like 20 trades on Pepperstone and I had like one or two small losses. He said, how come your losses are small? Right. And some of your winners are big, and then there's some that are just whatever. I'm like, well, it's the profile of the trades. And generally, when if I have a trade that isn't right and isn't giving me cash, it's because I got in at the right level, right? So I get a chance to get out. So I may have been nursing a loss, then it stalls. I just close the position out. It might be up 5 points. It might be down 5 points, because he's like saying, well, you have 5 point losses. I'm like, yeah. If I see the market change, why would I just sit there and let it hit the stop loss? The luxury is you get the right entry levels, right? And I'm just telling you this, it all comes down to the direction, right? You get these two things right and it's going up, invariably you'll have two or three opportunities to get out of the trade for a small loss or a small win, right? That's just the way of it. Now, if you don't do that and you're just trying to mess around with momentum, well, you can get some big surprises there. Okay, so very important you identify direction. If you've got it, well, let's look for a trading opportunity. And then it's just a matter of getting the timing. And as I said, either using something like stochastics, the fundamental data is imperative. You keep an eye on that, because that's where momentum can snap instantly and work with us or against us. But all right, so does that make sense? I know I sort of changed. There was just two different profiles I wanted to cover there. How to get these, how to easily get your prime time analysis done yourselves. Um, Once this is automated, which should be very shortly, then I would still encourage you to do it yourself and then come back and check the live analysis that we've got on our page, right? That's just smart, right? Because otherwise you're going to get lazy. You're just going to go, yep, that's up, that's down. If you set Metastock up properly, you can quickly do this. Just make yourself a template like this, and probably I'd put some plastic over it. Then you can rub it out each day, whatever it might be. But then that keeps you in the game. It'll be part of your routine and process. And then when you come back and do your analysis, you can easily make decisions around what you should be doing. And generally, unless it's a big fundamental release against the trend, you're generally going with it, right? So that's where you're going to have a higher win rate. Okay, the win rate, you want to keep that. Now, generally above 30%, you're going to be at break even, or 27% is break even. If you're up above 50, that's great. Above 70, 80, even better, right? If we get trending markets, that is going to be very high. You don't want to get into a situation where you're chasing these stocking fillers, right? If you find the stocking fillers are creating losses for you, you need to really assess your entry levels and the structure of the trades, because these things here are your bread and butter. But if they're causing dents in your P&L, you're picking the wrong levels and the wrong days. All right. Hopefully, I can guide you around the right days and the right time. Like today, from here on into the Fed, it's not the right time. I can tell you that. Okay. That's pretty much it, guys. There's so a bit of a viewing question for you guys. Any questions, outstanding questions you want to ask about well, anything really? Um, I'm looking for just while there's questions come up there, I am looking for some sort of clarity out of the Fed, and then from there we understand what the dollar's doing. It's the best time to be trading straight after that, especially around the fundamental data, and that's one of the other reasons why I will be focusing on the Aussie employment numbers. The central bank is determined to hold rates steady, but it will, like, if the Fed comes out and says, you know what, the whole world's going to go to the crap, um, it will impact things dramatically. And then we can see what the dollar's doing. Then it's a great time to overlay something on top of that. Aussie employment, UK employment afterwards as well later in the day. So that's why I'll be covering that event. Okay, Shelley's got a question. Not so much a question though, but a comment. The entry on dollar Swiss was a very close to the 50% daily fib retracement from the last leg up. Honestly, I was very hesitant to get in at that price. Without your analysis, I wouldn't have taken this trade. Well, that's good. Okay, so the thing there, Shelley, is you're actually what we want to do with this, especially with the 10-week challenge, is get you out of like just your comfort zone and look at some other opportunities, right? So you're looking at Fibonacci's and what have you. There's a good component to this, and what I was talking to Mo the other day, and Mo probably won't mind me sort of talking about this. I had a long chat with him, and he was like, he's been trading for a couple of years, understands the fundamentals inside out, and he's sort of like analysis paralysis by analysis, like too much analysis. And I told him as a remedy, the thing that you want to do is get back to basics. And he's like, well, I know the basics. And I'm like, no, I'm talking about the simple basics, right? And what are they? Well, I'm telling you, it's direction, right? And then just work on your timing, right? So whether you're looking at, say, like you got like euro was going up, so was sterling. They're both looking very good. Now that picture's changed, and we've got this thing coming up, right? As well as the issue with the Turkish lira and everything else going on. But it's all about direction. This is basics, right? You get direction right. As I said, you'll get chances to get out of the trade even if you're wrong. So get that right and then look for the opportunity. So when it comes back to looking at dollar Swiss, okay, let me just come over here to the main page because it's easier to sort of work out here, right? So I'm looking at dollar Swiss here. Now, I'm not a rocket scientist, but to me, this thing is going down, okay? And on a longer term perspective, I just get that, right? This thing has been sort of going up and down in some pretty serious ranges, but at the moment it is going down and it's broken down through this. So I don't need anything else to tell me to get short, right? I don't need Fibos. I've got trend lines. If I had no trend lines around, I would draw some Fibonacci's, but I don't do it if there's trend lines around. Now, Leonard, massive, loves the trend, Fibonacci's, draws them all over everything, and it works for him, right? But to me, you know what? It's like an extra thing if we don't have something else, right? And so if I lose my roadmap, I go to the Fibonacci roadmap, and that'll tell me where to go from here. So that's good, Shelley. You got into that trade? Did you? Oh, you did get into it because you said, yeah, without your analysis, I would not have taken this trade. That's all you need, right? You just need a helping hand to clear the road, simplify things. Otherwise, you can sort of get lost. Okay. Shelley's just saying there she took 28 points out of it. 3 contracts was twice my usual trade size. It kept me up all night. I slept with the computer on the bed. Good thing hubby was away, but I won't get away with that again. Okay. Well, you know what? That whole experience is good for a number of different things. You've increased your trade size. You took a trade that you probably wouldn't have without the extra help, and then you stuck with it. One of the other things that I probably will talk about at some stage is more the psychology part. When you start trading, and I'm pretty sure most of you guys in here will testify to this, it dominates your brain, right? You are in there, you can't stop thinking about it all night. It's like if you've got to get up at 4 a.m. and you know the alarm's going to go off, so you keep waking up every half hour. All night you'll be thinking about the trade. Am I in the cash? Am I out of the cash? Should I have a look? Should I take profit? But I can tell you, the more you trade, the less that will happen. Okay. Generally, it does take a bit of time, but I can tell you after a lot of years, I'm always thinking, you know what? I wonder if I've taken profit yet. I probably have, so I'll just go back to sleep. That's the general way I look at it. But I have had people in the past who have really struggled with having positions even when they're awake, right? I basically took them to the profile. I've said, look, okay, so you've got yourself short. Okay, so just envisage you've got short dollar Swiss here, and your stop loss is 25 points above. And you know what? You've just been stopped out. He says, "How do you feel?" He goes, "I feel good." I said, "Okay, so every time you put a position on, just assume that you've just been stopped out. Okay, you'll feel shitty for about 10 minutes and then you'll forget about it. Do that." And then he started letting his trades run and was making more money, right? So it's a little bit of a weird approach, but the to try and clear your head it comes with confidence and with experience, right? So I think you've done a great job there, Shelley, with that. That's it just shows you what can happen when you just get out from your blinkers and have a look across the board. And this is the power of the trading community as well, right? So the when you guys are trading, sharing trade ideas, we're all in the same boat here, right? Sure, I've got a bit more experience, but if we are looking for opportunities, just throw it up here, right? Because that's how you can sort of flush it out. And you might find something that you can work with, which looks like you did with me, Shelley. That's good. Gav's got a question there. So euro sterling dollar index are retracing pretty fast. If they come back, will they be worth a look? I was looking at dollar index earlier today. Okay, so just looking at the dollar index, right? So what you've got to understand, Gav, there's two things in play here, right? So that's why I quickly went to the news to see if there's any major news out. Now, I don't know if that Turkish news is fresh. It looked like it to me. So that is going to impact. It's a geopolitical event impacting this. And then we've probably got the biggest fundamental release with the most uncertainty in a long time, right? That's the Fed. So would I be looking to get in here on retracements? Not really, not at all. Okay. I want to avoid the serious carnage here. Now, if I come over here to the Euro page, so my templates, I'll have all the crosses here as well in the same sort of profile. So I can come back through and look very quickly at the profile of these things. So you're looking here, Gab, right? You're looking at Euro sterling coming back up, retracing back to this level. I don't think so, right? Primarily because at the moment, short term is down. I've got to put some stochastics on these. The still long term is up. You got a bit of a mismatch in direction. This is a European geopolitical event. If otherwise, it wouldn't be a bad opportunity, Euro sterling, right? Because you take the dollar out of it, you take the Fed out of the game. Okay. It just corrected that. So, which was the funny one, right? So he's talking sterling and euro. So he had a little backslash in there. So with the so looking at that euro and sterling, no. This is just a general reaction, right, to the news. Okay, Turkish lira drops more than 2% to new low after Erdogan rival detained. Right, so obviously messing around with the politics, just lock the opponent up. That's the best plan. If I was in charge, it'd be a good thing to do. But no, Gav, the price action of euro and sterling over the last 36 hours has not been easy, right? And you look at the structure of dollar Swiss, I tell you what, you wouldn't even know there was something going on. Okay, so dollar Swiss is worth a look, but as I was saying, we're getting closer to the Fed. Okay, so I'm not really looking to get into that, right? And we've got we've got 10 hours actually till the Fed comes out. So, I mean, there's opportunities, but to me, there's too many uncertainties, right? That's just my two bob. Doesn't mean you don't get into the trade if you like it, but if you do, I would just decrease your trade size because there's some unfamiliar news impacting the market. It's pushed the euro down. That could be the initial impact. Does it stay here? Does it retrace or keep going down? I don't know, and we won't know that until after the fact because you just don't know how important this news is to Europe. It may be an actual fact that it's just Turkey related, so it goes down, pressure on Europe, and then everyone goes, all right, well, that's just Turkey, right? Let's just go back up to where we were, and it might sit there. But Price action over the last 36 hours, not great. It's not really getting me into a hey, let's just go and trade euro. That looks amazing, right? If anything, it looks terrible. Um, yeah. All right. So yeah, I'll just leave that trend line where it is. It's not good. It's just one of those things that the upside of euro was looking so good. Last thing you need is some poopy news out of Europe to sort of put pressure on it when all we want is we want clear direction from the Fed. The Fed comes out and says, you know what? I don't know about inflation, could probably drop, growth dropping. The dollar doesn't look great. Then euro, sterling, everything keeps going up. But if you've got this uncertainty geopolitical event, it's just going to create uncertainty across investors and traders' minds, and that dilutes the whole move. All right, how are we looking? Enough yap today. Sorry, it was a
Yep.
little bit of a disjointed session. Yep. No, sorry, I must be hearing things. Okay. All right, guys. Well, that's where we are. As I said, just in prep for the Fed, like it's a real like a massive uncertainty. And if you read a few of the pages around the place, and I'm talking about sort of some of the well, not really opinion pieces, but what the news sources are gathering from, they usually have a couple of quotes in here from a couple of guys from different funds or banks or whatever it might be. Everyone's talking around the speculation around what the Fed are going to do. Like they've just got some numbers, right? Then they've got all these tariffs and everything else going on. How the hell are they supposed to work out what's going to happen to growth, inflation, and everything else, right? It's so speculative that I think even whatever they say will be taken with a grain of salt. Does it impact? It's the Fed. You think a little bit. I don't know. You just want this event out of the way, and then them to say, you know what, we're not 100% sure. Maybe a little bit different here and there, but we'll wait and see. But that'd be a nice outcome because then we can get back to trading the US dollar fundamentals and try and start nailing some trends, right? There's still plenty of time, right? Today, with the calamity in that Eurozone, there's still time for plenty of time for one good trade, right? You don't have to like get every trade that pops up. So if there's risk, I take it out. And if there's less risk and I've got direction, I'm straight in, right? And if I've got direction and fundamentals, I'm doubling my trade size, right? It's like this routine that you need to get into, right? And it all starts with your analysis. Make it easy. Understand the profile of the market you're trading is very important. As I said, that leads a lot towards what trade, how you're going to manage the trade, whether it's a stocking filler, an okay trade, or a really good trade. And you're looking for markets to line up, right? So at the moment, the good thing about what I can see is the dollar is doing the same thing against everything, right? So that is a good sign. Looks like a bit of a risk-off profile. US equity futures down. Treasuries aren't doing much at the moment, but that's something to work with, right? Equities down, euro, sterling, Aussie, Kiwi down, dollar up. All right, guys, that's it from me. Apologies about the change of time there, but unavoidable. All right, have a good sesh, and listen, I'll tell you what, the more you add content here, and I mean, don't add content for the sake of it, but if you've got questions and charts, what you put in is usually what you get back. Like I tell you, in the trading rooms, traders, all of us, we're superstitious, believe a lot in karma, and this is the same for us. All right, guys, have a good one. Oh, I've got this question there. All right, no, thanks, Shelley. All right, guys, have a good one, and I'll chat to you probably after the Fed. Right, we'll work out what's going on, and then eyeball some trades. All right, guys, have a good one. Cheerio.